Welcome to The Explainer. Today, we're going to tackle a huge question. Why are the biggest players in finance, the real heavy hitters, finally waking up to crypto? And what happens when they do? We're going to dive into some incredible insights from pioneers like Dan Morehead and Raoul Pal to really get a handle on the giant economic forces pushing this whole thing forward.
So, here's how we're going to break it all down. First, we'll look at the huge problem that's eating away at your money. Then, the one super obvious solution investors are starting to see. After that, we'll solve the mystery of why the big institutions are so late to the party. And finally, we'll look at what this all means for the future of finance. All right, let's get into it. Okay, first things first. We have to talk about this massive problem that's happening in the background, one that hits every single one of us in the wallet. It's this slow, quiet process called debasement. It's really just a fancy way of saying your money is becoming worth less and less over time because governments keep creating more of it out of thin air. You know, we always hear about inflation, right? That official number they put out every month. But is that the real story? Does that number actually capture what's happening to your purchasing power? Well, according to the experts we're looking at, not even close. And this is where it gets kind of crazy. Raoul Pal breaks it down like this. You take that official inflation number, which is already bad enough, but then you add in the rate that central banks around the world are printing new money, which is about 8% a year. You put those together and you're looking at a real loss of about 11% every single year. Just think about that. Your investments have to make over 11% just to stand still. It's not just inflation, it's like a hidden tax on your savings. And Dan Morehead just hits the nail on the head with this. He calls it what it is, a massive policy error. When the cost of living is soaring, but the return you get for saving your money is zero, something is seriously broken. It's basically a race to the bottom, where every country is devaluing its currency, and the loser is anyone holding that cash. Okay, so if your cash is basically a melting ice cube, what do? Where do investors go? Well, this leads us to what some are calling the simplest, most obvious big picture trade of our lifetime. So check this out. 97.5%. What is that number? Since 2012, that is the correlation between the stock market and the amount of money being printed by central banks. It's almost a perfect match. In simple terms, when the money printer goes brrr, the stock market goes up. It's that direct. And what that really means is it's all become one single trade. As central banks create more and more currency, all the things they can't create more of, stocks, gold, and especially crypto, they all just go up in value. So you're not really betting on a specific company anymore, you're betting against the value of paper money itself. And this is why Morehead frames crypto not as some wild speculative gamble, but as a pretty straightforward long-term play. He's basically saying the deck is stacked in its favor because of these massive, almost unstoppable economic forces. It's a trade you can just sit with. Okay, so if this is all so obvious, where are all the big guys? Where are the pension funds, the university endowments, the smart money? That is the real head scratcher here, and that's what we're digging into next. I mean, seriously, think about it. This has to be one of the only times in modern history where the average person, the retail investor, got in on a major new asset class before the giant institutions. So why? What's taken them so long? Get ready for this number. 0.0%. That is the median amount of crypto held by institutional investors. Zilch. The biggest pools of money in the entire world are sitting this one out. For now. And Morehead's quote here just perfectly sums up how weird this whole situation is. We hear talk about bubbles, but how can something be a bubble if the biggest financial players on the planet don't even own any of it? It's a totally different animal from the dot-com bust or the housing crisis. So why the hesitation? Well, a big part of it comes down to risk. But what's really ironic and what the whole Silicon Valley Bank situation showed us is that the traditional banking system is built on a model that looks a lot like what regulators were so scared of in crypto. Taking on huge amounts of leverage, promising people they can get their money out anytime, all while investing it in things that are hard to sell quickly. It's the same risky playbook. But the tide is turning. Right now. The dams are starting to break, and a few key things are happening that are basically forcing these institutions to finally jump into the water. And this is probably the single biggest catalyst. The entire regulatory mood, especially in the US, has done a complete 180. The approval of the Bitcoin ETFs was a massive green light.
It basically gave every investment manager a safe, regulated way to buy in, and it told them, hey, it's okay to do this now. That career risk that was holding everyone back, it's just vanishing. This timeline shows you exactly how the wave of capital is building. It started with regular people, you and me, in the 2010s. Then came the wealthy family offices. And now, in 2024, the big institutions are finally walking through the door. And what's next on the horizon? Well, that might just be entire countries. Moorhead's prediction here is pretty wild. He thinks we're about to see a global arms race for Bitcoin. Not just rival nations, but even US allies will start adding it to their strategic reserves. And when you have sovereign nations competing to buy an asset with a mathematically fixed supply, well, you can imagine what that does. There's just not enough to go around.
So, where does this all lead? This isn't just about a new asset to bet on. This could be the very foundation of a whole new financial infrastructure.
And the difference is just night and day. The old system we have now is built on layers of debt and leverage, and let's be honest, it always seems to need a government bailout when things go wrong. The new system, being built in crypto, it's based on fully backed assets. There's no hidden leverage, and it has never, ever needed a bailout. It's a fundamentally different and maybe more stable design.
And that's really the question we want to leave you with. As the biggest players on the planet, we're talking institutions, giant corporations, and even governments start stampeding into an asset that is provably scarce. The question isn't just who gets rich. The real question is, what happens to everyone else who waits too long to understand what's happening?